Hi guys, John here, Mr. Forexfire. Just want to show you something there. Kablam. Merch, starting to do some merch there as well. It's Forexfire. One more time. Right, so we're going to be doing a video tonight based upon something that I was going to put inside my Discord group, and this video will be going into my Discord group as well. Something I've been learning from another platform, and a shout out to Anton on this. This can be very sort of difficult if you're just starting out and starting to learn sort of Forex in a way, but if you know or you're quite knowledgeable on structure and the breaking of structure and understand the areas of what we call supply and demand, I'm going to show you something where you can sort of scalp on the 1 minute chart based upon structure points, and trying to get yourself a very quick in and out, clean risk to reward on average of around about 2 to 3, to be fair. Okay, so just watch the video. Again, we'll see where we'll go with this, and then we'll take it from there. I'm going to try and just keep this video to around about 8 or 9 minutes, to be fair, and just take a pen and paper and follow along if you can. Right, so just going to share the screen first of all. Put my handsome face in that top corner, make it a little bit bigger. From there, let's just take a look. Right, so first of all, you can see we are on the 1 minute GBP cards. We're going to identify the 9 o'clock area. There's the 9 o'clock. Okay. Now I'm going to look to the left. And when I'm looking to the left, I'm looking for previous sort of either higher lows or lower highs, or higher highs, and so on. Okay, so we can identify from this point we've got one here. Okay, so as we've come down, I'm basically waiting for a break of structure above this point. Okay, above this point, and then I'm looking for a return back down to an order block level, which is the last down before the up in this instance, which we can clearly see is that candle there. Okay, and we'll factor in the candle of this, even though you can see it's wicked in to touch that area. From there, guys, we would have basically, let's just see if I can get the bar replay. We'll start from here. And speed. Get it to play. Okay, so what we would have had, because we've had a break of structure here, just pause it there. So this is where liquidity was residing. Okay. So what we've had is we've had the break of structure here. So we will be setting a long position based upon that wick there. Okay, and bring this to a super tight just below there, because what we've got between the wick here to this wick here is imbalance. So you could bring it down to this wick to keep you safe. However, we'll just do just above that for 50%. You can see this is 31 points, so that's a 3 pip stop loss, and all we will be doing is sort of tagging to this high. Okay, this high here as we've crept back in for a correction. And what we'll do is, if we clear this out, you can see we've tapped in right there. Okay, and as we've tapped in, we've come out, and there's a nice risk to reward on a scalp of 3.19%. Okay, So now what we're doing is we're targeting, we'll be targeting this high. We'll be wanting to run a play on this high. Okay, so let's just play that. There's our break there. Okay, so from there, guys, let's get a long position. We'll do it from around about there to here. Okay. We don't know where the high is just yet because we haven't had a return back in. Okay, so we'll keep playing it out. Right, so there's the high there. Let's play this into here. There's our touch. Play this a bit further out. In fact, yeah, that's correct. From there, that I think that would have stopped us out with the imbalance. Have we got imbalance? Maybe from there. Yeah, it's below that one there, so that would have stopped us out. Let's just keep playing this. Just spread this out because we'll be waiting for the liquidity grab. There's the liquidity grab there. So that's, even though that one's lost, put a 1. -1. So we know we took the liquidity grab there. Okay, so now again, we'll go for the long, we're going for that there, based upon that structure there, onto that high, going over. There's the top. Now we've had a break. Okay, so that's a minus. We're now going for a short because we've come down, we've broke the structure of these here. So the last up before the down. Let's make it to that structure there. There's the top. There's a 2%. Okay. So there's a 2. There's a 2 there. A couple more players. Whoops. Let's see where we are. We were here, weren't we? So we've come down, we've hit the 2, we've come up, break a structure. You would have been playing this from here. It would have been from that point there, because obviously we've had to break a structure here. Okay, that would have been your target. Your break a structure on the point is this candle here, this order block. Okay, this is run a 1 to 4.31. So 4.31. Okay, just a couple of clicks. And so we see on here, let's get this click into here, it's down to here, and again, go for a long. You need it on this order block here, the last down before the up, run the play here. to the top of the wick. Okay, let's just play this one out. What the fuck is that on there? It's a shame, that's a shame. So we've got that there, that's just here not tapped in. Again, running the play. So that one has not ended because we broke structure on here. Once again, we're going for the long because we've got a double down on here. You can run it from here to the bottom of the wick there. Okay, again, this structure here at the moment, we haven't quite got a reversal yet. So we're waiting for a bit of a reversal. Okay, we'll have the reversal from there, even though it's just a one candle. You could technically risk it and go for that side. Let's see, we'll get a tap in. Possibly not. So again, forget about that one. Long position, we're going to go and take it from this area, move it up. This order block here is the area. Okay, let's move this back in. Again, we haven't had one. Let's move this in. Order block is between this wick and this here. Again, this one might stop us out because there's been a liquidity grab on the lower side. Okay. Yep, so the break is up here. We've had the return. Yeah. And again, it's just about measuring the ABC patterns, the ABC, which is the correction. We're going to go from the last down to the up. Okay, which is up there to the lower side there. That was the breakout to there. Bring this in. There's your tap in. There's a 1 to 3.4. Okay, so now we've got the break here. We're waiting for, you've got the, do a couple of more candles. Again, you've had the break. You've had the break here, to be fair, because we've hit the TP. This might start turning, but again, because it's still bullish, you're going for that play there because you've got the wick here. Okay, you've got the wick here down to the body, right? And the break was this here. Just need to get that 3.4 there. Make sure we'll get this right. There's the wick to just under the wick. Okay. Again, to the top side. That's played straight out. Just move this in. And this is taking us up to more or less the New York session. So I'm going to close this out at the 4 o'clock, 5 o'clock time. So a couple of more, we'll do a couple of more, then we'll see where we'll play it out at the moment. So we've got the wick, the last down before the up, coming down to here. Okay, on the upside, let's see where this one plays us. Touched and wicked us out. And then, yeah, that's shame because I went to the TP. And that's taking us up to 4 o'clock. That's a -1. Again, we've had the break structure up here. So we're still bullish. Long pattern. We're going to be going to the last down before the up. So it's from the wick of that. There's to there. That was the break. Bring this in. There's your tap in there. There's our reversal. So once you've had the tap out, obviously it's a -1. -1. And then we'll be looking for the sells because it's starting to come down in on a scalping. We're starting to get into the bearish maneuver. We're waiting for the pull back. Okay, there's your pull back. Okay, so that's your TP. That's your entry there. See what comes up. There's your wick. There's your wick entry. Is it going to pull down? This will be a nice this will be a nice one if it clears off. And this is taking us up to the 5 o'clock. And you can take partials on these as well, guys, to be fair. Let's just see if it plays out around with TP. Bang. There we go. So that's a nice one to end with. So there's a 3.87. Okay. 3.87. And so we're going to total these up. Okay. So it starts. So this is basically from the 8 o'clock or the 9 o'clock in the morning to the 5 o'clock. Let's just take a look. Let's get calculator. Okay, we've got a 1, -1, -1, +2, 4.31. Plus, is it going to be a plus or a minus? Plus a 3.4. Plus a 3.4. Okay, then we've got a -1 and a -1. So it's -1, -1. And then at the end, a 3.87. Plus a 3.87. And there we have it, guys. Based upon using basic structure, okay, based upon using basic structure, 10.58%. Let's get that calculator back on this, just so you can see that. Based on basic structure and using this method, again, this is given or would have given today, using this technique, an account growth of 10.58. Now, again, this isn't for people that are just beginning with this. It's something I've been testing heavily on demo, basically based upon structure points, okay, because this is still using a smart money method with regards to liquidity being factored in for your TP areas and your order block for where contract lies within. After that break of structure, it comes back down to fill in inefficiency, whether it's at the body of the open or whether it's 50%. But again, the trade would not become void until that contractual order block is sort of invalid by breaking through it or breaking up over through it. Okay, so I hope, I'm just going to stop the share. And I did this on a bar replay. Let's just take a look. Stop the share. Where are we at? Stop the share. So I hope you found that video somewhat a light bulb moment with regards to how structure works, okay, and how you can implement sort of smart money with regards to using your TP areas from the previous. When you get that break of structure, okay, and you start getting the retracement or the correction or the pullback, that is going to be your target area instantly. Your correction is going to be coming back down to the start of the impulse move of the order block, which for me, I've been doing a lot of these. I've been back testing a hell of a lot, and it works really well. However, and this is a snag point with it. However, you've got to be really careful when you're trading. You've got to have the correct mindset, because obviously you're going to hit quite a few minus trades before you get the ones that sort of skyrocket off. However, if you sort of reduce your risk as you hit the minuses in, let's say, a few in a row, instead of risking a 1%, you go down to 0.5% or a 0.25%. And then eventually, when you get the runner clear, once you get the trend and you hit the trend, you're going to start seeing the fruits of your labor of actually being able to use this technique and hold out for when you get that trend push. Because not only once you hit the trend, you're not going to catch it maybe on just that one A, B, C, because as the trend goes up, you're going to have many A, B, C, A, B, C, A, B, C on the maneuver up or the maneuver back down. Okay, let us know what your thoughts are on this video in the comments below. I might do a bit more on this on the YouTube channel, and sort of maybe even do some live sessions or some live videos on this at a later date as I get it dialed in. Because again, I'm not perfect at it, but I've got the eye for the structure points and how I've sort of used smart money to help me identify liquidity. Because after all, combining this into a scalper nature, okay, combining this into a scalper nature and using liquidity as your smart money and take profit areas, this can be very fruitful for you. Okay, so hopefully you found this informational and educational. Please put your thumbs up on the video if you liked it, hit the subscribe, hit the notification bell, let me know where you're watching from, and if you can do, head over to forexfiremembers.com. okay, the forexfiremembers.com on the website, put in your information on there, and I'll get you inside the Discord that I've got running at the moment. Okay, guys, and then from there we'll build your confidence, your consistency, and your profitability, and then I can show you an even better community that we are a part of. This is just a small entity. We've got a bigger, better community where we are helping people get through the funded challenge statuses. Okay, guys, so thank you very much. See you later.